Bad investments don't come with warning labels. They come with smooth talk, fake urgency, and too good to fail promises. Even smart investors lose money when they ignore the red flags or trust the wrong pitch. In 2024 alone, Americans lost $5.7 billion to investment fraud, a 24% jump from the previous year, according to the Federal Trade Commission. Knowing what to look for is half the battle, especially when scams are getting harder to spot. Here are the most common investment red flags, warning signs scammers rely on, and simple ways to protect your money before costly mistakes happen. But before we go any further, yes, this is an AI voice, but a real person wrote this. I earned my financial freedom and I'm not doing this for money. I don't like narrating videos, so I use an AI voice. Ignore that the voice is AI. The video is worth it. Check out the full details by visiting the link in the description. When an investment pitch starts with flattery, if someone tells you you're ready for the next level, they're not helping you, they're setting you up. This is a common trick used to sell overpriced seminars, courses, or trading tools. They stroke your ego, then spring the price tag. A legit investment doesn't need to butter you up first. If the pitch feels personal, it's probably manipulative. Unlicensed investment promoters are a major red flag. Always check if the person pitching you is licensed or registered. FINRA's broker check and the SEC's advisor search can tell you in seconds. If they avoid those systems or get defensive when asked, that's your answer. Trust is good, but verify first. Investing in unknown crypto coins is risky. New crypto coins show up every day, and most of them aren't worth a penny. If the name isn't on a major exchange or you can't find a real use case, think twice. You should be able to explain what the coin does and why it exists. If you can't, or the person selling it can't, that's a problem, not an opportunity. Guaranteed. Investment returns are a huge red flag. There's no such thing as a guaranteed return in the real world of investing. The stock market moves, real estate fluctuates, and even bonds carry risk. Fixed annuities are the only thing close, and they usually pay below inflation. Anyone promising high returns with no risk isn't offering an investment. They're selling a lie. Every investment should have a clear exit plan. You should always know how and when you can get your money back. If the exit strategy is fuzzy or full of conditions, you're locking yourself in. Liquidity matters, especially when things go south. Don't just ask how it works going in, ask how it ends. Overly complex investment strategies often hide problems. If someone can't explain the investment clearly in 2 minutes, they probably don't want you to understand it. Complicated language and long-winded explanations are often used to make bad deals sound impressive. Great investments are simple. You know how they make money and what the risks are. Confusion isn't a sign of brilliance. It's often a cover for something they hope you won't question. Avoid investment deals they won't invest in themselves. One of the smartest questions you can ask is simple. Are you personally invested in this? If they say no, that tells you everything you need to know. No one should be pushing an opportunity they don't believe in enough to fund themselves. If they won't risk their money, why should you risk yours? Beware of investment offers that pressure you to act fast. Real investments don't come with countdown timers or one-time-only deals. If someone's rushing you to decide, it's because they don't want you to think too hard. Pressure is a sales tactic, not a strategy. Good opportunities give you time to ask questions and do your homework. High investment returns without risk? Don't believe it. There's always a trade-off between risk and return. Always. If someone offers you 15% returns with no downside, they're leaving something out or flat out lying. Real investors know that gains aren't free. If it sounds too easy, it probably is. Past investment performance doesn't guarantee future returns. Just because something worked in the past doesn't mean it'll keep working. Many scams rely on showing off old numbers to sell today's risk. Markets change, and what went up last year can crash tomorrow. Chasing past performance is how people get burned. Final investment tip: trust your instincts. Building wealth isn't about finding secret shortcuts. It's about avoiding mistakes that wipe people out. Most bad investments share the same signs: fake promises, confusing terms, and someone pushing too hard. You don't need to be a genius to spot trouble. You just need to pay attention. Real investors stay patient, ask the right questions, and keep their emotions in check. Trust your instincts, and don't let smooth talk cost you real money. Thanks for watching. And if you found this video helpful, don't forget to like, subscribe, and share it with your friends. Also, don't forget the link in the description.